Hi everyone, I'm Sid, and I'm the Senior Research Analyst at ChartMogul. I'm really excited to be hosting this panel on B2B SaaS retention trends. In SaaS, retention is one of the most important metric, and it becomes only more important as you scale. At ChartMogul, we recently analyzed data from over 2,100 SaaS startups and published an in-depth SaaS retention report. So I'm fresh with all those insights, and I'm really excited to have the panel of experts here from like Vitally, June, and Fullview to discuss some of the takeaways and their take on it. Again, like we are co-hosting this panel with our awesome partners at Vitally and June, and I'd like to thank them and the teams who made this happen. In terms of like general structure of the panel today, I hope to keep it pretty free flowing, but still like to give it some structure, I have three sections in mind. So in the first section of the panel, I hope to cover retention as a topic and like why is it important. Moving on in the second section, I want to go and deep dive into recent retention trends and patterns and like what some of our experts are seeing in the market. And finally, in the last section, I want to leave you all with some strategies to increase retention. And of course, we are really looking forward to your questions. So don't be shy, do ask your questions in the chat. We'll be on a lookout for them. So without further ado, let me ask our panelists to introduce themselves. Daniel, do you want to go first?
Yeah, happy to. Thanks a lot, Sid, and thanks a lot for having me. I'm Daniel. Yeah, nice to be here, everyone. I'm the co-founder and CEO of a company called Fullview. We're based in Copenhagen, Denmark, but kind of have a hybrid team around Europe and UK. What we do is we work with customer support teams in B2B SaaS companies to give better insights to support agents to be able to understand user issues faster and thereby create better customer experiences. Yeah, I'm happy to be here and excited for the discussion.
Really happy to have you here, Daniel. Parker, do you want to go next?
Yeah, of course. Thanks, Sid. My name is Parker. I'm head of CS at Vitally. Vitally is a customer success platform. So I have the pleasure of a pretty meta role leading CS at the CS platform, working with a lot of customer success professionals. We are pretty much distributed across the United States and a bit in EMEA now, headquartered in Brooklyn, but I'm in Michigan, kind of north part of the United States with my family. Great to be here.
Thanks, Parker. Finally, Enzo.
Yeah, hi folks. Thanks for having me too. So my name is Enzo. I'm the co-founder and CEO of a company called June.so. And what we do is we are product analytics for B2B SaaS. So what it means is that we enable B2B SaaS to, understand what people do in their product and leverage that data in a way which is relevant for B2B SaaS. So instead of, for instance, teaching you how many people clicked on a button, we're going to help you understand if an account is activating and these kind of things. And we are a remote company too, and we are all over Europe at the moment.
That's awesome. Lots of remote companies out there. So really nice to have you all. So yeah, let's just dive into the panel and like the discussion. So Parker, like you are the expert on like retention, on like specialize in those fields. So like I just wanted to like kickstart with asking you like from a top level, like why does retention matter, and like why even should like we be talking about it as a topic? Like why should we care?
Yeah. Good question. I suppose like the shortest version of it is retention matters because revenue matters. But I think there's a couple different angles that we can go at it from. One is purely from like a cost perspective, and I think the other is from like a loss of upside if you don't prioritize retention. So purely from a cost perspective, it's very difficult to outsell a high churn percent number. It's like trying to, scoop water out of a sinking boat faster than it's sinking. So I think that's like the first thing. Marketing and sales are sinking a lot of time, money, and resources to closing these accounts, paying commissions, all of those things. all of that is impacting your acquisition cost for this customer. And then, when it comes over to CS, there's not many things that we are going to do from a CS perspective, especially if it's like a big product, somewhat technical. There's not many activities that we're going to do throughout their life cycle that are more intensive from a resource perspective than onboarding. And so if customers are just churning out at 1 year, we're never getting to year 2, 3, and 4. We're just stuck in the cycle of only doing like the highest cost activities with these customers to acquire them, and then just kind of burn through an onboarding that really isn't driving an impact. So I think purely from a cost perspective, it makes sense to prioritize this. But then there's also kind of like the loss of upside, where NRR is king right now in my world. And I think a lot of organizations are seeing just how much opportunity there is in their existing book of business. And it requires you to have a book of business, to have customers, to be able to expand revenue in. Cognizant though, like right now, 2023, maybe your NRR numbers are lower. And that's just kind of like the nature of things right now. But like March Madness, college basketball in the United States is going on right now. Like the theme is like survive in advance. And that's very much kind of the theme here, where it's just like, just retain the logo, do the work to put yourself in a position down the road to get that expansion revenue, because at least you give yourself a chance. If they churn, you can't get any expansion dollars from somebody that's not a customer. So that's kind of how I think about it, but I'm sure there's a lot of other lenses too.
That makes sense. So like, even like when I was digging into data for the SaaS retention report, like what I found was that the top quartile of companies, so like companies that have a net retention like greater than 100%, they grow at least like 1.5 to 3 times faster. So like it completely correlates to your point of like retention being like one of the key growth driver as well. And like if you like acquire this really hard to get customers and then like you're not able to retain them, like all your like CAC or like that goes down to the drain really sooner. So like in terms of like moving ahead and like just keeping on that retention topic, like what is something that like people get wrong about retention, and like what's something that they don't understand as well about retention? Maybe Enzo, do you want to take that one?
Yeah, I can take that one. I think Parker nailed the first question. The only thing I would add is probably on the retention that there is a business perspective on this one, but there is also a customer perspective, right? And if people come back to your product, then it usually means that they're getting value from your product, and you as a business means that you can capture that value, aka monetize, right? Most of the time. So I think it's just like a very healthy way also to look into your product and the value that people derive from your product. To go on your second question about something surprising. So one thing we do at June is we help people understand their retention and measure it, which is something quite specific maybe about our category of product. And I think we're exposed to a lot of these retention numbers all day long, And I mean, something we're seeing, which is very surprising for people, is that retention tends to improve progressively over time. And I think that's something that people are usually surprised to hear about. When you look into, articles of, startup success and so on, it seems that people get started with like a pretty poor retention, and then over time it becomes good. And then when it's good, then, customer success people are helping like to control the retention or things like that. It's actually more a journey. Like you're like navigating through a phase where your retention is bad, then it's average bad, then it's average, and you're going up, up, up. And at some point your retention starts to flatten and become pretty good. And this is, I would say, the so-called product market fit. But this is just about when you're going to launch a new product, which is likely to be unsatisfying. And maybe that new product is not going to have a good retention again, or maybe you're going to expand to a new vertical or a new persona, and again you're going to have a bad retention. And so I think the story that also I've just been sharing, I think it also repeats over time, and you keep having to go through these cycles. And this is why kind of retention isn't forever open topic for our company. It's never something which is done, like it's ongoing, I think, and that's pretty surprising for people usually. Maybe Dan has something to add, or
Yeah, I was just reflecting here. Super interesting insights from both of you. Maybe I can add a little bit from like also the support angle as well. Often these two teams, success and support, are tied pretty much together. Sometimes reporting to the same manager too inside companies, and obviously like focusing on like support is something that's very hard to scale, and it ties very much into like keeping your customers happy, and often measured by the CSAT scores that maybe a lot of people in the audience already use, your customer satisfaction score. So the thing with like support and how it ties into this is that it's also very hard to scale your support as you grow, because oftentimes you have to scale that with headcount. You just need to add more support agents into your organization to basically support the answer intercom messages or Zendesk tickets. So obviously the way we think about it is also how can we make people like that more productive in their actual like support, so you don't have to keep, especially in this economy, so you don't have to keep adding headcount to keep your customers happy and keep them retained.
Got it. So in terms of like just keeping on top of the metrics, and like we have a question coming in from the audience is like how frequently should you be looking at your retention data? Like is it daily? Is it monthly? Like when should you be reviewing it? Like for retention getting better or poorer? So like what's the time frame that you should look at this data? Anyone feel free to jump in.
In my opinion, the question depends on what stage you're at too. Maybe to Enzo's point previously, like if you're an early stage company, your retention is a key kind of sign of your product market fit. So definitely in the early days, like this would definitely be owned by the founders and the CEOs, but also the wider team. And I think it's something you should look at as frequently as you possibly can. So if you use a product like Vitally or something similar, then you should probably be looking at it, or June, I'm sure you guys can also display data like that. Look at it like daily, weekly, monthly, as much as you can in the early days, especially.
Maybe to have some color here, typically when you're building a product, the best way to observe the cadence of people returning to your product is to start from the ideal frequency of usage of your product. So let's say your Airbnb, you probably use it like 3 times a year, right? So their ideal retention is a quarterly retention. If you're using Vitally or Fullview, it's something you would use every week or maybe every day, right? So if you know what's the ideal frequency of usage of your product, then you will be able to look at the right time range for your retention. And then the minimum you should do is actually look into your retention updates for each of these time range, right? So if it's Airbnb, at least once a quarter. If it's Vitally or Fullview, at least once a week, and see if you're moving the needle maybe.
It depends on the nature of the product, right?
For sure.
And if you're TikTok, like checking every an hour, something like that.
Every 10 minutes.
Yeah. No, that makes sense. Coming back, like one thing, like I've been thinking about the industry in general, and like all the implosions happening. So like SVB kind of went like bust in the last week, and even before that, like we had been hearing like growth slowing down, churn being higher. So like just from a very practical perspective, like I wanted to ask you all here, like has retention been like a much more of a challenge for you in your companies, and like the founders and the customers that you speak to? Has it been more of a challenge in the past few months that it been in like say in the pandemic days or in 2021?
Yeah, I can hop in first. Yeah, I think so. And I think the change is there's a much greater deal of scrutiny around ROI. Like you just hear that term tossed around a lot right now. And I think CFOs or whoever kind of sits in that financial role within an organization are a bit more involved in the buying and the renewal process, but never like really directly working with the vendor. I don't think they should be, and I don't think vendors should have that expectation either. I think vendors need to take it on themselves to be able to tell an ROI story to their champions, to be able to kind of create a nice case for the CFO. But yeah, I just think there's a much greater deal of scrutiny where you clearly need to dictate how a product has delivered business outcomes for you. And I also think generally like B2B SaaS tools have not done a great job of like building in the tool intuitive ways to be basically like capture like, hey, here's like the value that you've received, or here's the ROI that you've received from the product. And so a lot of that work has gotten put on CS teams, rightfully so. Like they need to own that conversation. But I think the more that like CS teams can partner with like product and marketing to ideally like get those things intuitively in the product, or at least start to create like a nice consistent narrative that you can like equip your champions with around ROI, kind of the better, because these conversations are getting harder, and they'll likely stay that way for a period of time.
And so, Daniel, like any other thoughts on like what are you seeing in the market?
I think it's definitely something that is, I mean, not definitely, yeah, it's absolutely something that people care more about these days, because I think we've gone from being like sales and marketing kind of taking the driver's seat to customer success and support, really like taking the driver's seat to retain customers as the first priority before you add new customers. So definitely everyone we talk to, it comes up in like every conversation. Both our own customers and our customers' they think about it. If they're looking at our tool and other tools, that's like the number one thing they think about is NRR these days.
Yeah,
Interesting.
100%. Maybe the only thing I would add is in terms of timing. You're talking about SVB and the recent crisis. My feeling, but maybe like we're a bit biased because I mean, maybe it's because of like this, the market we're targeting and kind of the maturity of the companies we're targeting. But our hunch at June is that kind of the biggest lump in terms of churn was kind of in December, January, something like that. Was the end of the year. A lot of people started to consolidate their stack, wanted to cut a lot of expenses, things like that. We've seen, so this is where we've seen like the biggest drop, and it seems like quite a few customers have seen the same. Of course, it's not systematic. It's not as good as the analysis that you've run, but it seems that since then it's like, again, it's like getting it's worse than it was, but it's kind of like getting a slightly better. So I have my hope that the market is returning to a slightly better state, and it's in the trajectory to get slightly better rather than a trajectory to getting worse.
I think it's worth noting that we don't necessarily have real-time data on churn as well, because if you have annual subscriptions, you don't really know. There's a delay, right?
Yeah. I think like from our perspective and like what we see in the data for like startups using ChartMogul or like companies using ChartMogul is that 2022 was particularly harsh. So 70% of the companies like had lower retention rates in 2022 compared to like the previous year, and it was really hard for a lot of companies out there. So yeah, like hoping this year turns out to be a lot better than that. So just like maybe clicking a little bit on retention, and like, are there any particular segments where like that are like particularly hit hard, or like any industries that you think are impacted the most and like you should be aware of?
I keep hearing a lot of like HR and kind of employee training types of tools are heard these days. I don't know. I mean, this is only anecdotally that I hear that, but sounds like anything that doesn't help you directly, like make more money or save money, seems to be quite hurt these days.
Yeah. Or what you said, Daniel, anything which is tied to the headcount is being impacted, right? So if you don't recruit, if you have frozen your recruitment, then you're being impacted. I also heard that a lot of companies that were charging on a seat base, well, they are impacted, right? Because if you recruit less, there are less seats, right? Some data companies, for instance, in our space, are charging per seat, and somehow they're being impacted, which is kind of crazy. Yeah, so industry and this kind of pricing. And I think then something which is pretty obvious, but it's even more the case right now. Usually the bottom of the market is what is the most impacted, because this is where like you can get out of cash pretty fast. And in an environment where it's getting harder and harder to raise cash, whether it's like an initial funding round or bridging with extra cash and so on, for sure, this market segment is being more impacted at the moment.
Yeah, to like double click on that one, like to just paint a very broad brush, I think that's what we're seeing as well, where it's like SMBs are more likely to just get rid of a tool entirely and just try to get by on like a core tech stack. CRM, product analytics, email, those are the things that you don't really need to build an ROI case on. You're just going to like have them. And so that's more what we're seeing there. And yes, certainly like for the customers that we work with that are like seat-based, upmarket, like mid-market and on up, I think that's more where they're realizing the impact is around like NRR, really impacting seats and things like that. And I think the other thing too is like, we're not seeing maybe as much of customers just like churning and like not moving to another tool upmarket. It kind of gets back to like that scrutiny piece where like if a tool historically had done like 8 of 10 things that they really needed to do, then yeah, that's fine. But now they're just expecting a lot more out of those tools and really consolidating that and making sure that like, okay, this needs to really kind of check all of the boxes as well upmarket. So it's like they're still going to spend that money. They're going to be very mindful of it though.
Have you guys seen anything like do you think companies that sell to enterprises are better off these days? Because naturally it's harder for an enterprise to, rip out a vendor.
Yeah, I think so. And again, some of it does get back to like how hard it is, like for, our customers, like some of like the products that they have are like very easy to replace, very easy to like rip out, even if it is like an enterprise using it. But like, yeah, the bigger the product is to like adopt and start to use, that's where it's like, there really is like a cost that they have to like weigh. And, again, like there is kind of like less of an expectation on like, you don't really need to like prove to me that like, my data warehouse is important. Like I get it. It's more like kind of like the products where it's like, there's, a ton of these options where people are looking to like consolidate tech stacks and things like that. So a bit of it is kind of like product specific. And again, it kind of just gets back to like those products kind of realize like if it is easy to like replace it, make an airtight case for your product on why you can't.
So something I've seen maybe Dan for the enterprise segment is that it seems that when cash is very cheap and you can use a lot of cash, companies tend to diversify or try more bets. While when things are getting a bit harder, they tend to consolidate or focus on like, let's say the best business unit they have or the thing that really worked for them. And if that's the case, then the way you can think about it is that they will probably tend to buy more tools that are outside of their core focus, right? Because why would they, give resources to build something that is not core to their business, right? So I think what's happening is that it's reshuffling the cards at the moment, where basically if you're within the core of the company, they're very likely going to displace you with in-house technology. If you're like, more on the tangent or outside of the core business, then there's a good chance that they will keep you and keep buying you.
I think there's a strong silver lining to this as well that I think is worth noting. Like the customers that like, it's obviously harder to win customers these days, but the customers, and like they're going to scrutinize you more, but the customers that you will win in this environment really, really need you. And hopefully in the long run, those will be the ones that you will retain the best in the coming year.
That. No, go ahead. Parker, you were saying something?
Oh, no, I was just saying, yes, Daniel, you're right.
No, yeah, that's a very that's not all is doom and gloom. Like customers who you acquire at this point in time, like I kind of agree, they'll stay with you longer. And so to your point, like companies are looking to like get more efficient, and that means that they are also looking to outsource some of the like tasks that they're not key at to like other like SaaS startups or other tools, and that could be a great opportunity for businesses in this environment.
Yeah, and also worth noting, I think as a early stage founder, and I think that I'm an early stage founder, and I think a lot of people in the audience are too, like you also have less noise in this environment. Like the people that actually buy your product, you're most likely going to be able to find stronger product market fit, or like there'll be more signal and less noise versus like 2021 and 2020, where like people were just buying because they had so much money, and then that could create a lot of like muddy the waters for understanding whether you actually have product market fit.
For Enzo and Daniel, do you feel like your customers like right now are like even more honest on like these are like the very specific things that we need to see out of it more than in the past?
There's less BS for sure.
Yeah, for sure. Especially if you raise from a VC fund, it's very there is this thing that happens a lot where basically companies buy each other's product and so on. They don't buy it to just be nice to each other, but there's this kind of reciprocity happening in the tech world. And I think now it's like people don't do that just for the sake of doing it.
You mean like the whole kind of like YC economy where people just buy from each other? And
YC or any kind of like accelerators or incubators, I think startups tend to pay it forward a lot, which is great. But I think in this environment, I've seen a lot of people saying, like, okay, we really love your product, but it's too expensive for what we're doing right now, and which is exactly the kind of feedback you want to hear when you're early stage.
Agreed.
No, all that in good direction. So like jumping guns a bit, like getting back to retention. So like who is the person that owns the retention metric in your SaaS businesses? So like if the retention is not up to the mark or is not high as possible, like who should I, like as a CEO or a founder or like as a employee, like who should I reach out to? So who's that person?
I think you should be mad at yourself. If you're the CEO, then it's kind of like on your shoulders to figure out like your retention, and if you need to pivot your product or if you need to focus on a different type of customer profile. It's really like on your shoulders in the early stages to figure that out. What do you guys think?
Yeah, I think that's I always want to like work with leadership teams that like view it as like a strategic and organizational problem to solve for. So I definitely echo that. We go, obviously like on CS, like that's a number that we own. Or maybe another way to say it is like that's a number that we represent. And so we need to have like answers on that. And so, we might have like 5 common like churn reasons. Maybe it's like externalities related to like the market, maybe it's products, maybe it's expectations, and that's really like a fit issue. Maybe it's like contract and then services, and each one of those we should kind of have like 1 or 2 teams that like we kind of partner with on those reasons. If it's like a services thing, like that's totally on us. Like we need to make sure that we are dialed in, that the customer like understands how to use the tool. If it's like a product thing, that's still kind of on us to make sure that we are properly educating them, but then we're also partnering with products to like advocate for these use cases, understand like where the misses in the market are. If it's expectations, maybe that's more of like a conversation I need to have with like sales and marketing to make sure that we are identifying the correct ICP and that we are positioning the product in like a meaningful way. So I think it's like make sure that we're identifying like the reasons that customers are leaving, and then try to like figure out like what teams does that like most impact, and how can we like tactically start working together to solve for this.
Yeah, I'm with you on this one, Parker. I think I feel that when you're early stage, it's something that is on the founder's shoulders, and then it gets siloed, and then it ends up on like the success people. I really have the feeling that it's a metric which is owned by many people, or that at least many people have an impact on. So I think of it as a leading metric, which is basically really high level, and then there is like a lot of lagging metrics, a lot of things that is going to impact it. I think the NPS or the satisfaction is one of them. I think marketing has a huge impact on churn and retention. I think if they don't position well or they don't market the right product the right way, I think this has like a drastic impact, which often people overlook. Pricing is huge. Usually pricing is owned by some operation teams, whatever. If the pricing is wrong, also has a big impact. So I think it's one of these metrics that you can't just push to one team. And I think I can't really think about any other metric in the company that is so much shared, right? Like acquisition, all the rest is not like that. So I think that's probably what also why we're discussing it today. It's because it's a very central point in a company.
Yeah, that's a good point. I mean, that number, like, it is kind of just like a proxy for your product. Like, do people want this? Are they lining up to want more of it?
Yeah, I think both Parker and you, Enzo, like touched upon like one point that maybe I want to like drill down a little bit on is like, so you talked about like Enzo, you talked about marketing being like key to like having that retention, and like Parker, you talked about like how that defining the ICP is kind of key. Could you talk a little more about like what, like how does marketing fit into retention, or like why is like that defining the ICP important in scope of retention, say?
Yeah. For like there's certain products where it's like, you could, I don't know, sell a bottle of soda at anybody, right? But like there's certain products where it's like it's very specific, like who you're targeting with it. So like certain products, like it just makes sense to be a product for like B2B SaaS. And so you shouldn't try to at least immediately sell to like non-traditional companies that like fit that profile. So I think it's like very important to just have like an honest conversation about yourself, about where you are, about like who's resonating most with the product, and then just keep selling to them. And then, you'll have customers churn and understand like, why is it because of like a miss with the product still? Okay, we'll continue to like refine and go from there. I think it can be a miss if like you just give the job to like a marketing team to like open up the total addressable market, right? Like that's, to me, like a shared initiative with like product to make sure that we're like actually ready to go do those things. Curious for these founders, like how you guys think about it.
Yeah, I think I look at it the same way, and I think it's also a lot of people like maybe not to put the blame on anyone, but like when you work in sales, like I've worked in sales previously, and there's also an incentive to in most traditional kind of incentive structures and sales teams to bring in any customer, because that's kind of like you get your bonus, whatever, as a account rep or account executive. And then you don't really care about, like, you're not incentivized to care about what happens after that, right? So you're actually incentivized to just not necessarily bring in the right customers, right? And someone might be willing to, a customer might be willing to, put a bet on a product, try it out, or maybe in theory it sounds great, but then down the line they'll just end up churning, and then it becomes the problem of someone else, which is CS, right? So I think there's a lot to do with changing those incentives that drive for the people that bring in new business. Make sure, like, whether it's sales or marketing, you mentioned marketing, Enzo, depending on your acquisition strategy, your go-to-market strategy, just make sure that there's an incentive to bring customers they're actually a good fit and they'll stay with you.
Yeah.
And now how you actually do that, that's the hard part.
I think there are really two things. There is like the persona or ICP, or who is the person coming, and then what do you tell them? What do you deliver to them, right? And sometimes you have the right person, but with the wrong message. Sometimes you have the wrong person with the right message, and you can iterate a lot because there are so many combinations. And my feeling here is that in terms of positioning, I think there is really like, there are very few ways. I mean, there is usually one great way to do it, and it takes a lot of iteration. And it has, when you find that way, you usually see a great impact on your retention. And this is where it becomes really hard to move away from that positioning. It's because it worked, and you've taken so long to find it that you don't really want to move away from that. So I think that's maybe one thing that people don't think about too much.
It's like an innovator's dilemma in some way, right? You have something that works, and it's a risk to experiment.
Got it. I think we have a couple of questions coming in from audience. So like one question that we have is like, and it's a bit technical. So like, what time period do you use to calculate NRR? So like they should look at monthly NRR, quarterly NRR, or annual NRR. So like what time period should you measure it over?
Yes. I don't know. I like looking at it like lots of different cohorts. So like year to date, last 365, last 90, current quarter, because they can tell you like different stories. And then I think it's also very important to like overlay things like, the segment that the customer's in by NRR, maybe the health, like if you really believe in your health score, like health by NRR, to actually see like, okay, is our poor customers like correlated to like a lower NRR attainment? And if not, then okay, we need to like refine that and get better signals. So I think a lot of different ways to cut it up. But you do want to like, I think as like a leader, executive, like you need to look at it from a lot of different perspectives and then choose like what's the most impactful or actionable like for your team. So for our team, like it's something where I want them to be like aware of the number, but just like staring at it is not going to change it for them. There's a lot of like upstream things that they need to just be doing. Just focus on like good processes and just repeat those things over and over again. And we'll kind of put that on ourselves as like leaders to like kind of look at all of like the different trends. So I look at a lot of them.
Yeah. So wearing my analyst hat, and like I have a view here. So like I think like you can look at it in any time period. Like you can look at it monthly, you can look at it quarterly, you can look at it annual. I personally prefer annual, but like you can decide like whatever works for you best. But I'd say look at it consistently in that fashion. So rather than like jumping from like monthly 1 month to quarterly next to annual like the next month, don't do that. Like have a consistent metric that you look at across cycles, and what that will show is like like you'll not look at metrics that work for you or like work in your favor, but like you'll start to find patterns like where you are lagging or like where you are growing. So like I'd say yeah, pick some time period and look at it consistently. That's my recommendation. And so I think I cut you off like.
No, that makes sense. I agree on this one. I think, like every time we talk about the metrics, basically it depends a lot on the story you want to tell, right? Like, I think like if you look at the net revenue retention, let's say for 1 year or yearly one, what you're going to understand or what you're going to figure out is whether a specific segment of your customers spend more money with you or less money with you over 12 months, right? But then the question to you was, did you want to extend the revenue? Like, did you add some revenue lines to your existing user base? Did you focus on the same audience? Did you upgrade kind of their accounts? Did you maybe go market? Was it your strategy, or did you maybe like open new markets, iterated, maybe even pivoted, right? What's the story? Something that a lot of startups do is don't charge yearly. It's actually something that June didn't do for some time, just because we're really, really keen to get the churn feedback right. So very recently, we actually introduced the yearly plan. And so for us, kind of the NR would have been a lot lower, right? Because people were churning before the year, right? I assume, or actually a quarterly or monthly NR would have been pretty bad. Maybe the yearly would have been the same, right? But what was the hypothesis? What were the topics that you had, in the background and that you were trying to figure out? I think that's where you should start when you want to answer that question. Because as both of you said, there is like just so many ways to measure it, so many frequencies, and they're all pretty much correct.
Awesome. So like we have one question that's really popular with the audience, and like they want to get your thoughts. So like what are some activities or tactics that have the highest ROI in improving retention at your company? So like what's working in today's market to reduce churn? Whoever wants to take it first.
Maybe I can share some thoughts on our perspective. One thing we do is like we really try to be proactive in the way that we help our customers and kind of like handhold them in a way throughout, like they come with us, they onboard, and then we're basically monitoring and making sure that everything is going well. Like we don't just kind of let them off to do their own thing. We really try to see what is going on in their in their day-to-day uses of the product. And then we try to be really proactive in the way we do our own customer support. Most of the time, customer support is, and it really ties into also like success and retention, to show like, because people want a great customer service, especially these days when the bar is very high. So instead of waiting just for customers to reach out and report issues to us in our support channels, we try to look for those issues through our we use our own product, and we also use different product analytics tools to understand like potential user frustrations or issues. And then we actually reach out to customers proactively with an email saying, hey, I saw this issue happened, here's how to prevent it, or we're already working on a fix for it if it's our fault. And yeah, usually the feedback is really like, it stands out a lot to people, because I don't think a lot of companies are doing that kind of proactive support yet.
One thing to add on top of that, I think we pretty much have the same approach. I think being intentional, knowing where your customers are at is very important. If someone is not happy with your product or doesn't engage with your product for some reason, at least collecting the feedback, as Parker said, like, learning from this, from the people that have given a shot to your product. I think that's the minimum you could do. Maybe the one thing that is a bit different that we learned recently is that if you can understand what's the goal that people want to have with your product, like what's the success definition for them, then you can help them navigate that journey with you. So something that we've seen a lot of great companies doing, and we try to introduce that at June, we're not there yet, is like every month or every 6 months or every 3 months, whatever, really trying to understand why you're adopting a tool like ours, what's the goal, what's the success definition like for you, and really try to help you get you there, right? So I love Daniel's definition because it's about like the blockers and the friction and so on. I think you can actually push that much further and really understand what people want to achieve, and you can actually help them get there, right? Whether it's like with a human or with the product or with touch points, self-serve touch point on the success side. I think this is where the bar is at these days.
Yeah. We basically approach it the same way here. Like what we try to do is just at the beginning align on like what's the outcome you want to achieve, and we try to like really follow like the OKR format. So like what's the objective and like what's the key result that you want to see this product drive, and like by what time, and then drive that to completion, and then that's the signal to align on like the next goal or the next initiative with that customer. And we do it in like a very transparent and collaborative way. Like we just have like a feature called Docs, but like it's the same idea as like a Notion or like a Coda or anything like that, where it's just like a success plan shared with the customer, and it just has the goal and it has the key result that they want to achieve. And then ideally it has a nice check mark, and then you do the next one. And so then when, you have that like dreaded stakeholder change, a new person like comes into the organization, they're like, why do we have this tool? What has it done for our team? You can just be like, well, here's those things. You don't have to do all the digging through the product to try to like put this puzzle together. Like we just have it here documented for you. So yeah, that's kind of like the ideal state for how we try to approach that.
What are your views around like discounting as a tactic, like to increase retention or like to like reduce churn in the near term?
I think it's these days it's quite obviously that's quite relevant. People are more price sensitive, but also in the early stages, it's like you need to be a bit careful with it, because it can also give you like kind of a skewed view of your own product market fit. Like if you're giving like the thing you're also trying to validate is also your that people want to pay a certain above a certain threshold for your product, right? So if you keep giving discounts, you might kind of skew that insight.
Yeah, I think there are a couple of great articles about when you should and shouldn't give a discount. I think if you feel it's the wrong persona or ICP, or that they come for the wrong reason, then you're basically just delaying the churn, right? You're gonna make a few bucks, but it's gonna hurt your NRR and all these things that also investors look at a lot. So I think there is something here about like how much you believe giving the discount to someone will turn the person into the right persona, or will maybe just save you some time until you meet that persona with a new product offering, versus how much it's going to hurt you and potentially also your financials, and how much you're going to use these financials over time, to do whatever, whether it's like raising funds or something else, right? So Something we learned early on at June is that the people to whom we gave the biggest discount, they were churning the most, right? So at some point we just reconsider completely this approach. But I think these days it's very common to give a couple of percentage to people that wants to leave, and it's something that's a lot of people say has been working for their companies. So I assume our company is quite young, right? It's like 2.5 years. So I don't know what happens if you do that for like 5 years, but I'd be happy to hear others.
So now, those were really helpful insights. Unfortunately, like we are at time, but I'd like to thank like Enzo, you, Daniel, Parker, like so much for like making this panel really insightful, for your teams for making this panel like really successful. I really enjoyed speaking to you all. Hope our audience enjoyed too. Appreciate you taking the time. For those of you who are looking to like go back and listen to the replay, I think the replay would be with you just momentarily. So yeah, thank you once again for joining this panel. Really appreciate it. Thank you.
Thanks a lot.
Thank you.
Thanks, Sid. Thanks, folks.